What's up, Facebook Live? Welcome to our live stream today. So what we're going to be doing is we're going to be talking a little bit more about business loans today. We are going to be diving in and talking about how to get fast financing. As a matter of fact, we're going to be talking about the fastest type of financing you can get for your business. It's called revenue lending. Well, that's what we call it, is revenue lending. We're also going to be talking about alternative SBA loans. We're going to be talking about how you can get long-term, low-rate financing, as well as get fast and easy financing through revenue lending. So we're going to be dissecting this. I'm going to talk to you about rates and terms and approval requirements and everything you need to know to be able to leave the live stream here today and actually start getting approved for business loans, even when your bank won't approve you for business loans. So let me start by giving a real quick overview of what we went through, not last week, because I missed you all last week, but the week before, where we talk about how you can get approved for business loans. So remember, if you're looking to really get a loan for your business, you don't want to try to go to your conventional bank. Banks are fantastic if you're very well established. If you make $1 million plus in revenue, if you do $500,000 in revenue. What's up, Paul? Welcome, man. I saw you on Periscope yesterday. I appreciate you coming back. So again, conventional banks are fantastic places to go if you have all the requirements that they look for. And again, what we did last or 2 weeks ago was we just took a quick look. I'll just kind of give you a quick overview. Remember, banks want to see a perfect business. They need to see that you've got no felony convictions or anything in your personal background. They're going to want to see you have tons of experience in your field, a really, really well laid out business plan. You've got to have personal and business credit reports that are really good. As a matter of fact, they tell you to remove any blemishes on your credit report. We've seen people with 780 credit scores get denied by SBA loans, and this is on SBA's website. You can see I'm looking at right now. They're going to need to see that you have good tax returns, personal and business, for 3 years. So you can't even get approved for a conventional SBA loan unless you've been in business for at least 3 years. You've got to have good current and projected financials where it shows that you've been making great money and you're going to continue to. You need to have good personal and business bank accounts, managed well, lots of deposits, lots of positive ending balances. I'll tell you why they're asking for this here. And a little lesson that you may not know. You actually have 3 types of credit as a business owner. You have your consumer credit, which you're obviously familiar with, right? This is credit that's linked to your personal Social Security number. You have business credit, which we talk about all the time, right? That's the big whiteboard behind me. We talk about how to build credit for your EIN that's not linked to your SSN. That's business credit. They also look at something called bank credit. Now, bank credit is a secret credit scoring system that only lenders actually have. So you will never, ever in your life ever see your bank credit score. You'll never know what it is. They'll never tell you what it is. It's an internal credit score that's provided by the banks that the banks look at to determine if you should qualify for a bank loan. It takes into account a lot of different things. It takes into account, most importantly, the amount of deposits that you have, the ending balance that you have, the amount that you keep in your bank account over a 90-day time period. So if you want to have a good bank credit score, or let me put it this way, if you want to have the bare minimum of bank credit scores, you need to have $10,000 in your bank account on average for 90 days. If you do this, this gives you what's called a low 5 rating, which makes you lendable. If you don't have $10,000 on average ending balance in your bank account the last 90 days, you're not going to get a bank loan because they won't give it to you because your bank credit score will be so low. A high 5 bank rating is if you keep $70,000 in your bank account or more. So, we often hear you can get money when you don't need it. Well, there you go. Conventional banks, as I just showed you, you've got to have good personal bank credit. You got to have good business credit. You have to have good bank credit as well, which means you have to have at least $10,000 to $70,000 on average you're keeping in your bank account to even qualify for a bare minimum of credit scores for an actual bank. So that's one of the reasons that they're going to look at your bank credit. They're also going to look at your bank statements. Now, your bank credit also takes into account if you have other accounts with the bank, how you manage your bank account, how much money you have left over in your bank account every month, all those factors, but I just told you the minimum or the main one. collateral. With bank conventional loans, you gotta have collateral to offset the risk. It's often 50 to 100% of what you're borrowing. They'll use a personal home. They'll take all your business assets and everything they can get their hands on. Then you gotta have all this other stuff, right? Your lease, your articles of incorporation, all this other stuff. We talked about this stuff last week or 2 weeks ago. That's what you have to get a bank loan. This is why most people will not qualify for financing if you go to your bank. So what we did 2 weeks ago was I told you my 3 C's formula to get financing. I'm going to give you a quick overview. Then we're going to jump into exactly how you can get money within 24 hours. So the 3 C's formula, unlike a SBA loan that we just looked at here, that looks at all this different criteria. And if you'll notice, there's 3 things that stand out. They need collateral. They need you to have cash flow, which is why they're asking for bank statements, financials, and tax returns. They also need you to have good credit, which is why they're asking for personal and business credit. They need you to have good credit. They need you to have good financials, good cash flow, and collateral. If you don't have these 3 things, and you can see almost their entire list is comprised of these things, the 3 C's: credit, cash flow, and collateral. If we look at their entire main list, their main list is mostly comprised of these 3 things: cash flow, credit, and collateral. If you don't have one of the 3 C's, cash flow, credit, collateral, you cannot get a bank loan. What you need to know is that, as we talked about a couple weeks ago, there are specialty lenders that will lend you money only if you have one of the 3 C's. If you have cash flow of $10,000 a month or more, we're going to dive in and talk more about that right now. If you have good credit, you can get unsecured financing up to $150,000. And if you have any of these types of collateral, even sometimes commercial vehicles and other kinds of business collateral, then you can qualify for collateral-based financing. So today we're going to talk a little bit more about the first C, cash flow financing. How you can get money quickly if you only have cash flow. So what happens is, remember, with SBA, you can't get a loan unless you have cash flow, credit, and collateral. With cash flow financing, you don't need credit, you don't need collateral. You can get approved for what I'm about to tell you with revenue lending if you don't have these 2. So that's a big difference from a bank loan. A bank loan requires you to have all 3, check, check, and check. And with this financing, cash flow financing, you don't need credit, you don't need collateral, you only need cash flow. So this is what we call revenue lending. It goes by a lot of different names out there, including merchant cash advance, cash advances, revenue financing. We call it revenue lending. You've got to have about $10,000 a month in deposits or more and be in business 1 year or more. Now, if you have compensating factors, you don't have to have both of those necessarily. So let's say you've got really good bank account management where you have high ending balances and you've been in business 2 or 3 years. Well, then you might be able to get away with only $8,000 or $9,000 in deposits. Let's say that you've got $50,000 a month going through your bank account, high ending balances, and you've only been in business 9 to 10 months. Well, then those other factors compensate for this and you can still get approved. We actually have lenders that'll go as low as $5,000 a month in deposits and 6 months in business, but you have to have compensating factors to qualify. $10,000 a month in deposits, 1 year in business is the typical norm. You can get up to $500,000. How do you know how much money you can get approved for? Well, it's actually a pretty simple formula. You can get approved for about 10 to 12% of your annual deposits. So if you have $10,000 a month going into your bank account, that's $120,000 a year. You can get 10% of that roughly, which is about $12,000. You can actually get about 10 to 12%, so you can probably get about 12 to 13, 14 grand, but that's exactly how that works. So basically, they're going to look at what you've done over the last 3 months. They're going to use that to get an idea of what your actual deposits are monthly, and then they're going to give you about that amount as a loan. So, for example, if you have, let's say, $10,000 a month, then you're probably going to get about $10,000 to $13,000 in financing with this program. Again, about 10 to 12% of your annual revenue. So let's work it up. If you have $100,000, let's say if you have $200,000 in annual revenue, because you have to have at least $120,000, remember, for this program. So if you have $200,000 in annual revenue, you'll probably get $20,000, $25,000 in loan. If you have $500,000 in annual revenue, you're probably going to get $50,000 to $60,000 in a loan. If you have $1 million in revenue, you're probably going to get $100,000 to $120,000, $130,000 in a loan. You're going to get about 10 to 12% of whatever your annual revenue is. Now remember, this is per your bank statements. They're looking at how much money you have deposited in your business bank account. So if you use PayPal and any of these other crazy ways to get money, that's fine, as long as that money is being deposited into your bank account. That's what they're looking at, is what's going on in your actual bank account. Proof of this kind of loan, they're basically going to want 6 months worth of bank statements and merchant statements, and then typically just a driver's license. That's about it. This works really well because, first of all, you want to supply your merchant statements. And thanks, Paul, for the comment. I appreciate that. I appreciate everybody sharing this. I appreciate the likes. I appreciate the comments and engagement. It means a lot. Keep it up. Thank you so much. Anybody else that you think may be interested in this, please share the information. Let's get it out there. So you can basically come in and get 6 months worth of bank statements and merchant statements. You want to send both. The reason you want to supply both is because it makes you look better. We have some cases where the bank statements don't look that great. So we get the merchant account statements, they look better. We send both and people get a loan when they normally wouldn't get a loan. Okay, and they're also going to want your driver's license. That's about it. Now nowadays you can go right to your bank account to online banking. You can easily come in and download your actual bank statements and then use those to actually qualify. It's pretty simple. Christine, what's up? What if you have a slow season? Would they need longer amount of statements? We'll talk about that in a second. But ultimately, if you have a slow season, it's not a bad idea to actually send more than 6 months worth of bank statements. And you don't want to try to apply in a bad season. You want to stay ahead of the curve, and I'll show you why in just a minute. Because what they're really going to look for is they don't want to see your revenues declining from month to month. They want to see your revenues being consistent or going up from month to month, not a decline. So if you're trying to apply for this program going into a slow season, it's tough because they're going to see bank statements that are good, going up, 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 or staying even, and then drop. You don't want that. That drop is a problem unless you have some other kind of compensating factors like larger ending balances, for example. So you want to try to apply before you get into a slow season, Christine, because if you're in a slow season and they see that decline, it definitely becomes a limitation. Okay, your rates on this program, about 8 to 55%. Wow. That's a huge range I just gave you. And the reason is because risk is all over the board on this program. They can help you no matter how bad your credit is. They, in a lot of cases, won't even pull your credit. If you have good bank account management, good time in business, good positive ending balances on your bank account, you're going to get a lower rate. If you've never got a cash advance before, if you don't keep good positive ending balances on your bank account, if you haven't been in business a long time, these things are deterrents, making it harder for you to get this kind of financing. So let's look at some of the benefits on why you'd want to get this kind of financing. So first of all, you don't need any collateral. There's no collateral at all. Your home, business collateral, no collateral is required whatsoever to get approved. You can literally get money in 24 to 72 hours. We've had multiple cases where people needed the money to pay payroll. What's up, Fred? Welcome. Where people needed money to pay payroll, and we got them the money within 24 hours. 72 hours is very common if, again, you have the information that their bank is going to need. Paul, how about if you have a client, how many times funding can you submit them for at a time? I don't understand your question. Hey, buddy, welcome. It's cool. Skip, you're on here too. Welcome. So, Paul, how about if you have a client, how many types of funding can you submit for a time? As many as they qualify for. If we have somebody that qualifies for cash flow financing, credit, and collateral, we'll submit them for all three. So we have multiple people that will often have good credit and cash flow, and we'll get them approved for these two programs. We have even more people that will have these as well and qualify for multiple different programs. Okay, we just have a client that we actually got unsecured financing, and then we also just got her equipment financing, for example. So as many programs as your customers will qualify for, we can get them approved for. So no collateral required, funding within 72 hours, 24 hours, no credit score requirements. This is kind of new this year. Okay, it used to be that they needed about a 500 credit score or higher. But now what we see is that they will actually not pull credit if your risks are low. If your bank statements look stellar, they won't even pull credit. And I'll show you what bank statements look stellar in just a second. If you have problems with your bank statements, they may want to see your credit, and even then, they'll still approve you if you have a 500 credit score or better. So if you have good bank statement management, you can get away with no credit pull at all, no inquiry, none of that. You still will have a personal guarantee, but no credit pull. If you have bad bank statements, they're still going to look at your credit, but you can still get approved if you have a 500 score or higher. So that means if you mismanage your bank account here, if you have better credit scores, average like 650 or higher, it improves your chances of getting approved. If you have bad bank account management and really bad credit, it becomes harder and harder. The risk factors get tacked on. So you may get approved, but your rate will be higher. I like high rates like this. Personally, I do. And I'll tell you why. Because it means they deal with the bottom of the barrel. It means they deal with the highest risk situations that you can have. And if you're high risk, I don't mean to insult you by saying bottom of the barrel. What I'm trying to say is that when you're really high risk, it's hard to get money. And if a lender will help you get money at really high risk, you're going to pay a really high rate. I don't care if you're getting a residential mortgage. I don't care if you're getting a commercial loan. If you're high risk, you pay a higher rate. That's how lending works. You pay based on risk. So Christine's asking how to get credit in better shape and who would you recommend? There's a lot of different places that you can actually, Christine, you can get with us or email us info@creditsuite.com. We'll get you a bunch of people that can help you with credit repair. A lot of our partners are in credit repair. They run ridiculously awesome businesses. We'll get you with somebody, one or multiple partners that can help you. We don't do credit repair, but we have a lot of credit repair companies that use our service to offer business credit to their customers. They're very legit. They have phenomenal services. Credit repair is the real deal if you work with a knowledgeable company that knows what they're doing. So Christine, if you email us info@creditsuite.com, who would you recommend for credit repair? We'll get you over to a credit repair company that can help you, and they're really, really, really good at what they do. A lot of these people I've known for a long time, like 6, 7, 8 years. I've been friends with a lot of people in the industry that could do really, really well. And a lot of them are clients and know a lot about business credit as well. So here's the deal. Again, I like high interest rates. I like low interest rates. My goal is to get our clients 0% on every kind of financing that exists. But the reality is high rates mean they'll help you when other sources won't help you. So don't ever be afraid of a high rate if it helps you solve your problem. So we had somebody, for example, that they have like a soda company, and they sent all the bottling of their soda out where? Paul does credit repair, so if anybody wants to hit him up, Paul's right here right now. And what happened was the bottling was costing him a large part of his margin. So he needed to bring the bottling in-house, and his margins were going to increase like by a high percentage. The money was going to cost him a lot because he was high risk. He got the high risk money to be able to bring the bottling in-house and immediately shot up his revenues. That's where this kind of financing makes sense at higher rates if you're going to use the money to make more money. So again, if you get a higher rate, don't be worried. It just means you're higher risk. What makes somebody lower risk? Well, these things make things lower risk. Remember, what happens is all they're looking at is your cash flow to qualify you for financing. That's it. So if you have good, consistent cash flow per your bank statements, the better it is, the lower risk you are. And again, thank you guys for the likes. Thank you guys for the shares. It's awesome. I appreciate it. And thanks for the comments and questions as well. So what are they looking at to make sure that you are lower risk? Let me grab my marker. Okay, my Sharpie. Okay, so here we go. Bank statements. They want to see deposits of 5 or more a month. They want to see you don't have a bunch of non-sufficient funds. The fewer the better, definitely less than 10. Okay. You also need to make sure that you've got positive ending balances. They're going to take the money out of your bank account daily, weekly, sometimes monthly. So they need to make sure you have money to be taken to pay back the loan. So you've got to have positive ending bank balances to typically get approved, okay? You also need to make sure you have increasing deposits month to month. Christine, this is what we were just talking about. You don't want to get this financing as you go into a slow season and they see that you're declining in revenues. They want to see your revenues staying the same or going up. And if they see your revenues going up or then you can get approved. If they see your revenues declining, it's very concerning because this whole process is based on revenue. So the lower the revenue and the more the revenue is declining, the scarier they get, the harder it is to get a loan. So again, what's cool about this program, no collateral requirements, no credit score requirements, money in 24 to 72 hours, regardless of collateral or cash flow. That's freaking awesome. And all you have to have is a well-managed business bank account. You need to have a lot of deposits, 5 or 6 or more a month. You need to have few non-sufficient funds, hopefully 0, definitely less than 10. You need to have a positive ending balance on your bank account at the end of each month. You also need to make sure your month-to-month deposits are increasing or going up. They don't like it when they're going down. They don't like it when they're going like this either. They want consistency. Now you can get, the norm is to get daily paybacks where they take money daily from your bank account. We do offer weekly and monthly options as well. Our partners offer those. We offer those as well. So those are absolutely available. Okay. You can, at that point, get a loan term that varies. It's all over the board. You can usually get a loan term of 3 months to 18 months is the norm. We now have lenders that will do 3-year loan terms on this program. To get 2 and 3-year loan terms, you have to be lower risk. I just told you what lower risk was, how you manage the bank account, time in business, the industry you're in. Those type of things will determine risk. If you're in a high risk industry, if you haven't been open a long time, if you don't manage your bank account responsibly, those make it harder for you to get longer terms. In the beginning, they often want to lend you a shorter term till you prove yourself. We just have a lady that comes in, bad credit, bad bank account management. She owns a farm. She literally wants to get money to buy cows. That's what she wants. 100 grand to buy 100 cows. So instead, we got her 20 grand because that's all she's going to qualify for based on revenue, and it's her first advance. She got a 5-month term. Pretty common. Somebody comes in, they're high risk, they get a shorter term and not as much money. Then once she proves herself, in another 2 months or 3 months, we'll be able to refinance her and probably get her the 100 grand, 50 grand she's looking for. So with these programs, sometimes you have to prove yourself and get in the door first. Once you do that, then your chances of getting more money are much greater. About 70% of the time, people that get this kind of financing come back and get more. It's over 70%. It's actually about 75 to 77%. So most people get the money with the 6-month term. Then they come back when half of it's paid off, 3 months into it. They say, I want more money. They do one bank statement review. If the one bank statement looks good, they give you more money in 24 hours. It's so easy to get more money once you've got into this kind of program. They usually lengthen the term, and then they also lower the rate. So that second and third and fourth time you come back, you're getting more money, you're getting a longer term, you're getting a lower rate, and all of this means that you get better terms, better payments. And again, monthly paybacks, weekly paybacks, it's all possible. But in order to get it, you've got to be lower risk. If you're not, you get in the door, you prove yourself, you do what Christine said, focus on improving your credit, improving your revenue, improving how you manage your bank account, and then in 2 or 3 months, you'll get more money and more money. We had a lady that wanted 40 grand for a tow truck, came in, got her 8 grand. She came back 3 months later. We got her the 40, so she had a 40 total of 48. Then she came back another 3 months later, and we got her another 48 grand. So she literally wanted 40, and within the course of like 7 months or less, she ended up getting almost 90. But again, the first advance was 8 grand. She took it, she bought another truck, she increased her revenues. We got her 40 second time around, 48 third time around. I think we just funded her again. So the key is that if you've never done one of these before, you might get a lower loan amount and shorter term in the beginning, but once you prove yourself, they give you longer terms, they give you lower rates. Let's review, and then I want to talk about alternative SBA. So only based on your cash flow. Doesn't matter your credit quality or collateral. You get about 10 to 12% of your annual revenue actually loaned to you. So if you have $500,000 in revenue, that gets you about 50 grand loaned to you, for example. Rates are all over the board. 8% if you're really low risk, 55% if you're high risk. Usually you're somewhere in between that, usually in the 20-30% range on the first advance. 6 months, and again, that's all tax deductible. So if it makes sense, it makes sense because you get all the money back on your taxes anyways. All you need is 6 months bank statement and your license to get approved. Okay, no collateral required, funding in about 24 to 72 hours, no credit score requirements. It's only based on bank account management, deposits of about 5 or more a month, non-sufficient funds of 10 or less a month, positive ending bank balances, and you also want increasing deposits month to month, okay? So that is exactly how financing works. If you did want to get approved, feel free to go to creditsuite.com/consult, creditsuite.com/consult, or you can go to creditsuite.com/get funding, no dash in between the word get funding, and we can actually tell you everything you can get approved for right now. Now, the other type of financing we're going to talk about today in cash flow is called alternative SBA loans or private money loans. These are kind of like SBA loans, except they don't have all the ridiculous income requirements and the document requirements that SBA has. Skip, I have a small S Corp, should have 6 trade lines by Feb, just got approved for $40,000 to $70,000 with the finance blueprint qualifier, back to making the donuts and answer advisor calls. So Skip, as I do and a lot of our actual team members do, will go through and test our program to see how it works. And he's talking about just getting approved for $40,000 to $70,000 for this little side business he's doing using the finance blueprint qualifier, which you can get approved for all these type of financing and more at creditsuite.com/get funding. So let's talk about alternative SBA loans. Here's the deal. We just looked at SBA loan requirements. They're sick. They're ridiculous. It's a lot involved. You can get around it all by going to an alternative SBA lender. Lenders that are private money or banks that are not conventional banks that don't have all the stringent SBA requirements that SBA loans do and conventional bank loans do, but they still give you good loan terms and good loan amounts and good rates. And I'll show you exactly how. So it's primarily based on cash flow, alternative money, alternative SBA, and private money. I call them alternative SBA because they're not SBA loans, that's alt, but they are an alternative, a hybrid of SBA loans. This is going to require typically 2 things: tax returns that show increasing profits year to year and good personal credit. Okay, so usually they want to see 700 scores or higher, and they want to see tax returns that show a profit. There's some more sources that are popping up that don't have these requirements. So for example, we have a source now that if you can get 5% of the loan amount from peers, from your friends and family, then they don't necessarily need tax returns to get approved. We've got other people that if you have good tax returns will only go to a 650 credit score and you'll still be able to get approved. So usually most sources you need good personal credit tax returns. Nowadays, if you have one or the other, there's a possibility you might be able to get private money or alternative SBA loans. You can usually get $50,000 to $500,000 without a lot of scrutiny. You can actually get these up to $20 million. They just take many, many months to actually get approved. Right now, we're working on closing a $13 million deal. It's been going on for about 4 months. It's pretty typical. SBA loans, alternative SBA loans that are $1 million, $2 million, $5, $10, $15 million can take longer, but you can get 50 to 500 grand pretty easily. 2 to 4 year loan terms. Nonprofits are okay. The $13 million deal we're doing, I'm pretty sure is a church. We do a lot of church loans. So you can get approved as a nonprofit, 2 to 4 year loan terms, $50,000 to $500,000 loan amounts. Approvals are often based on your net profits that you show on your tax returns. Typically, sometimes they'll get you approved for a variant of your gross revenue. Sometimes they'll approve you for what your net profits are on your tax returns or a multiple of what your net profits are on your tax returns. But that's alternative SBA. The difference between the two is revenue lending, you're really at bank account management. If you have good bank account management, then you can get approved for revenue lending, and it's really fast money. It's just really easy money, but it's more expensive than term loans. Alternative SBA and private money, these are term loans. These are 2 to 4 year terms, which remember, even with revenue lending, if you're low risk, you can get 3 year loan term. But these are longer loan terms, and the rates are better too. I didn't put the rates on here, but these are typically 8 to 15% rates, so much better interest rates. But you know, it's a 30 to 60 day at least underwriting requirement time frame. You've got to have good personal credit. You've got to have tax returns. You don't need that stuff for revenue lending. Revenue lending, good bank account management. That's it. Private money, alternative SBA, tax returns, and good personal credit is typically what's needed, where you don't need either of these for revenue lending. So, a bunch of different options. Today we've talked about what's involved with getting approved for a conventional bank loan at a place like SBA. We've talked about the 3 C's again in summary, which we'll constantly talk about because I want you to get this in your head of exactly how you can qualify. Do you have cash flow? Do you have credit? Or do you have collateral? If you do, you probably qualify for a loan. You can go to creditsuite.com/get funding, no dash between the words get funding, and get approved. Even if you can't, don't have cash flow credit or collateral, then you can still get business credit. And Christine just actually commented. Christine's one of those people where we're going to have her on a webinar next week. She's just got a $40,000 Best Buy credit card, 40 grand. So she's now at $148,000 worth of total credit in the last 2 months that she's obtained using business credit without cash flow credit or collateral. So if you don't have any of the three, business credit's the option. If you do have cash flow, remember, if you have good bank account management, 1 year in business, $10,000 a month or more, you can get approved for revenue lending. If you have good personal credit and tax returns, you can get approved for a long-term term loan using private money or alternative SBA. Whew, lot. Answered a lot of questions, went over a lot of information. In our next Facebook Live, next Thursday at 11, we're going to dive in and talk about unsecured financing. I'm going to teach you how to get 0% financing for your business, even as a startup. That's what we'll talk about next week. And remember, if you want more information, get with us. You can go to creditsuite.com/consult, schedule a consultation, get a free business credit report. We'll talk about qualifications. You can also go to creditsuite.com/get funding, no dash in between, get funding. And from there, we can qualify you for all cash flow credit and collateral programs. And if you don't have any of them, we can talk to you more about business credit. No more questions, so I'm going to wrap this up right now. I thank you all very much for checking out the live feed today. Next week, Thursday at 11 o'clock, we will be diving in and talking about credit-based financing, how to get up to $150,000 in unsecured financing with you or a guarantor, and get it at 0% rates for 6 to 18 months. It's going to be powerful. I'll see you next week on our live stream, Thursday at 11 for that. And if you aren't already, go to creditsuite.com/Facebook, creditsuite.com/Facebook, grab a free guide on building business credit, and we'll notify you of our next webinar. Where in our next webinar, next Wednesday at 12:30, we're going to map out exactly how Christine's got nearly 150 grand in unsecured business credit in 2 months' time, without cash flow credit and collateral need being needed. So I look forward to seeing you then, and I look forward to seeing you next week on our next Facebook live stream at 11 o'clock Thursday. Thanks, everybody. Don't forget to share. Don't forget to like. Have a great day.